years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It is Thursday, June 6th. I've got a pretty improvisational show for you today. It is mostly me talking. There is going to be a lot of charts. There's going to be a lot. Just to set you up, I'm going to set you up in the first minute. I'm going to talk about next week and why we want to look at next week. I'm going to talk about earnings that we have next week. I'm also going to explain to you everything that you see on the screen right now is my Trendspider setup. I'm going to explain to you why I have each of these indicators and everything that you see on the screen. I'm going to explain to you why. I'm also going to show you my portfolio and why I do things the way that I do, my percentage of everything that I'm going to show you and what's going on. We're going to talk about a wall of money that could be coming into the market according to Goldman Sachs, which should push us higher. We're going to talk about GameStop. We're going to talk about Apple versus NVDA. We are going to talk about solar stocks. We're going to talk about Dollar Tree and this long-term performance against Walmart and Costco and Target. We're going to talk about SMCI. And my thoughts on it. We're going to talk about earnings last night. LULU absolutely killed it. And then I'm going to give you a couple of educational videos before I go into social requests and scans. So let's first talk about next week and why next week is so important. Now, what did we have yesterday on the Qs? We had a breakout yesterday. From that support level, we're back to all-time highs. The algorithm did absolutely its job. It didn't get you out. Even though we dipped past that support level, for one day, May 31st, it was the morning and the afternoon. We dipped below that. You had a nice inside candle on the afternoon. That meant, hey, we're probably going somewhere. And then we regained the confirmation and it went up. You can see the Bollinger Band cinched up here. And they were telling us, hey, it might be going down. It did go down, but the algorithm kept you in. And good thing that it did because yesterday it ripped. We're at all-time highs. Now, I'm telling you, it's Thursday. We have a couple of earnings, nothing after the bell today that's going to kind of go anything. But next week, we've got a couple of big things. We have Apple's WWDC, which is going to be an enormous, again, I don't know if it's sell the news. So remember Bitcoin when the ETF came out? It was 100% a sell the news story. I don't know if this is going to continue, but if this continues and we get some really good AI like information on Siri, on the operating system, Apple, we're going to break through that 198 and we're off to 250. I don't know that that's the case. I've been predicting that this summer we're going to see some pullback and we're going to see some choppy waters, but Apple has underperformed this year. So we've got that one. We've also got a Tesla shareholder vote. This is going to come with a lot of volatility because if the shareholders actually vote down Elon's pay package, that's probably not going to be good for the stock. So I don't want you to buy the stock here. Ron Barron was on CNBC yesterday saying, hey, if I could buy more stock, I would. And he's talking about how he supports Elon, blah, blah, blah. Now, the algorithm has you out with a 1.57% loss. The reason you want to listen to the algorithm is because it's back tested, okay? There is no predictor of future performance, but when you back test and the algorithm performs this good, it makes you 113% over 24 months, okay? You lose 26% on Tesla if you just bought and held for 2 years. It's an 18% average win. Your average win, you win 43% of the time, and that's on a downward trending stock. So that's over 2 years. You've seen these big blow-ups here. Now, we're in a situation where the Bollinger Bands are cinching up. We've seen it become oversold here, and it did get a little bit of a bounce, but it didn't hold. So this shareholder thing is going to be big. And the biggest news next week is going to be the Fed. And we can take a look at VOO. We talked about it yesterday, how Tom Lee thinks that the SPY is going to go to 550. The VOO is my preferred one. We just got another buy-in. The algorithm got you out of VOO on May 31st with a 3% gain. That's nice. You missed this nice little run up here. I do say look for entry points. And this 489 is a good entry point. Your MACD is crossing up. Your RSI a little bit extended. But if you're dollar cost averaging into VOO, this may be the start of a bull run. You don't know. You want to do that. But the biggest thing next week is going to be the Fed meeting. And if the Fed, Europe just decided this morning to cut rates, that was a surprise. That's going to be bullish. If the Fed stays too long, we're going to be behind the rest of the world. And the rest of the world isn't seeing inflation like we are. The Fed is now on the clock because the rest of the world is ready to cut. Canada cut the other day as well. And then we have a couple of earnings. The most biggest one is GameStop. We'll go over GameStop in a little bit. I do like to play on GameStop. But a couple of interesting ones. We have Oracle, we have Broadcom, AVGO is the symbol, and we have Adobe, which I find interesting because the software stocks that have not hit, they've been losing a lot. We can talk about Salesforce. We can talk about a couple of other ones. But Adobe is reporting as well. And today after the bell, we have DocuSign. I personally own DocuSign. In fact, I think there's a question in the social request about DocuSign. We'll go over it. About whether I'm still holding it or not. We'll go over all of that. But I do want to go over my entire screen here. And what you see, this is the majority of the time what you see. It's Trendspider. And Trendspider is a program, a charting program. This is technical trading, and it's not difficult. It really isn't, but it depends on the amount of work that you put into it. What Trendspider is, it takes the training wheels and puts it onto the bike. So you're really using technical trading, but these things are helping you. So I want to go over exactly what I have. So these lines that you see, they're called moving averages, okay? There is 4 different moving averages. They're on the screen. Why do I have them on the screen? Because they tell me the trend of a stock. Let's take QQQ, for instance. You can see this blue line. It's the 50 period moving average. That tells me it's moving up. So for the medium term, QQQ is still in a bullish status. You can see this red line right here. That is the 200-day. This is a long-term moving average. That moves up that way. I've got a 9 and a 21 as well. If you want to see more about my setup, it is down here in the education portion. The education portion, if you go and see all of this stuff, I go over all of this stuff, my entire setup, MACD, whatever. All of my setup is in there. It's at dailystockpick.substack.com. But this screen, so those are the moving averages. Now the next one, down here at the bottom, I have RSI. This is the relative strength index. Why do I have it? It shows me whether buyers are showing up. Who's going to show up next, buyers or sellers? It's a 0 to 100 ratio. 100 means that buyers have just overextended it. Okay. 0 means it's way oversold and buyers need to show up because the price is incredibly cheap. It's not an absolute, but it's a good way to tell. You can typically see, look at this. On May 31st, the RSI got down to 38. That is considered an oversold territory. What did it do? It bounced up. Now today, we're at 66. Does that mean we're going down? No. It just means we may take a break. Because then you've got the next indicator that I have, and this is the MACD. And the MACD, moving average convergence divergence. This is my favorite indicator. It's what my 4-hour algorithm is based on. It is what you see, the entries and exits. There's a large component with the MACD in the algorithm. So you can see the entrance and the exits on this. It completely outperforms buy and hold on many, many tech stocks. I am a big cap tech investor. So I designed this algorithm to really move around tech. This one, over 2 years, it makes you 53.9% gain. And this brings me down to the bottom portion of this. Well, let me go over the top portion still. Bollinger Bands. Why do I have the Bollinger Bands? These are the blue shaded areas that you see. Because it tells me when a stock could reverse. When you're trading on the upper portion of this Bollinger Band, okay? You're not in the upper portion right now. The upper portion is way up here. But when you're trading in the upper portion of this Bollinger Band, wait, you are trading in the upper portion of this Bollinger Band. I'm sorry. It's a little bit tough to see. But the Bollinger Bands tell me you're trading in the upper range of this. This tells me maybe we're going to take a break. Maybe we're going to go sideways. Maybe we're going to go down. Again, you're just adding. You're building a layered cake. Think of this as a wedding cake with the different layers. You're just building it until you can come to the top ornament with the groom and bride. And that top ornament is the one you want to knock off. That's the one, oh, I want to buy or sell it. I'm going to get to the top and I'm going to make my decision. That's it. We have volume down here. See these little candles up, down, the blue and green and red candles with the blue line? This tells me that volume's going down on QQQ. We're heading into the summer. Seasonality. And I'll get down to the bottom right where we can go into the seasonality of Trendspider as well. You see this kind of orange shaded area right here? This is what's called a gap snake in Trendspider. It provides me a view to see gaps. What's a gap? Well, when you trade like on this on May 3rd, you close the day at 435. Okay, the next day you opened at 436, 437. That's what's called a gap. And that gap provides me a look. It's important for me to see because it's trading opportunities. This close term gaps typically need to be filled. And when you start to fill them, you want to trade around that. Now, these things over to the right and these blue lines that you see, these are volume by price. That's important to see because you want to see where the market is valuing this stock. That's exactly what you want to see. Now, the bottom of the screen that you can't see, there's a couple of things. Okay, strategy tester. This is where the algorithms are kept. This is where my 4-hour algorithm, this is where my 65-minute algorithm, and my 5-minute algorithm, that's where they're kept, strategy tester. You have to backtest your strategies. I want to see if the strategy that I'm currently trading on in this stock is working. There's no future, indicator that's going to tell you, oh my God, it's going to work in the future. But the best indicator I have personally is to look at the history. And if I can look at the history of in and out, where it tells me to get in here like this 407, and then it told me to get out with this nice 14% gain, and then it told me to get back in higher. If I can see, well, does it make sense to buy and hold? Well, the strategy makes sense. So you have to have a strategy tester, and this one back tests it for me. Now, the next one is the market scanner. You guys see me live on YouTube do this every day. I don't want to sit there and just look at a chart of QQQ every day. I want to say, okay, my strategy is QQQ in or QQQ out. The scanner will provide you that. You can do the Dow. You can do the NASDAQ 100. You can scan within 30 seconds to a minute. You can scan every chart and say, should I trade this one today? That's what the market scanner has. Now, this right-hand column that you see on the bottom that you may not be able to see, this is seasonality. This tells me what period are we in. And I like to look at that from every now and then. It's not a major indicator for me. But for instance, July is a 100% win rate for QQQ. What do I want to do? And we did this last year. You trade TQQQ, a triple levered ETF. Sure, it's fine if the strategy presents itself. You can have your stop losses in, but what I want to do is at the beginning of the month, I want to buy TQQQ, and if the middle of the month we're way down, I'm going to reevaluate that one. I can have my stop loss or I can buy back in, whatever you want. But it's a great strategy when you have a monthly win rate of 100% going back 20, 30 years, whatever you want to do. Now, behind my head here, I have alerts. Why do I have alerts? Because I like to copy alerts for stocks. There is typically 4 or 5 types of alerts that I have, and I can just hit the copy for a stock that I'm currently looking at. It's nice to have. And then up here in the upper right, these are all my watch lists, and I can look at every stock that I have. I have my brokerage holdings. I have the daily stock pick core portfolio. I have all Bitcoin and crypto that I look at. I have energy names that I trade. All the levered ETFs like the TQQQ. I have all the ETFs, low-cost Vanguard ETFs. I have the spider sectors, so I can tell what they're doing during the day, and I can scan them. All of that is on Trendspider. And Trendspider, how do you get Trendspider? Well, you go to my link tree, linktr.ee/daily stock pick. And you go over here, you sign up, and then you email me. It's $48 a month for this. And I provide you everything. Everything. The strategy tester, the market scanners, the watch list, everything that I use, I provide you. You do have to set up your own screen. but you can do it the way that you want. If this is too busy for you, you can customize it. I like it. I like it a lot. Now, moving on to my personal stuff. I wanted to show you my personal portfolio. Now, I've always said that Apple was 60%. That was the first quarter. In the month of June, I just did this morning. Apple is 48% of my portfolio. The next one is Amazon. I say this in the newsletter. I provide this free in the newsletter for you, where I do an analysis of my portfolio. So sign up for the newsletter. It is free. But yes, Apple is 48% of my portfolio. Amazon is 8%. I don't want anyone following me, because the reason you don't follow people on the internet is because we all have different risk tolerances. And that's the issue. There are a lot of people who would not be able to sleep. They may have a Google phone. They may use a PC. If you can't sleep with 48% of your portfolio in Apple, you should absolutely not be following me. But you should listen to me, because I have a history of actually making money. That's what you want to do. You want to make your own decisions. But when it comes to managing your portfolio, you have to manage that yourself. It is all on you. Now, what I also want to point out to you, and I haven't said this in a while, but I'm going to bring it up again. The portfolio that I like to have is 40% of my portfolio I don't freaking touch. Okay, the Apple stock, I don't freaking touch it. So it's 48% of my portfolio. I don't sell it. I don't buy it. I let the dividends just be reinvested. I basically just sit there, and it just earns me money. That's it. For the another 40% of my portfolio, I like to check in every 6 months to a year. You know, I like to do that. And then the other 20% of my portfolio, I will absolutely trade within a day, within a week, within 2 months. I don't have a time frame on it. I just know, hey, I'm going to sit there and hold it. I may sell it within a day if I'm actually trading it. But what I want to point out to you is 91% of my overall portfolio is domestic stock. It is heavily tech. It is domestic stock. 1% is foreign stock. Okay, 8% of my portfolio. Remember I talked about that 40-40-20? That 8, I'm not anywhere near that, because the majority of my portfolio is in a long-term buy and hold. 8% of my portfolio is short-term. Why am I in a long-term buy and hold? Well, look at the Qs. I am a big cap tech investor. And when you look at January 2023, remember, short-term is less than 1 year. And we go back to January 2023. What are we in? We're in a bull market. And I've said this. I didn't take this July summer. I didn't take it off last year. Yeah, it was a hard 10-15% pullback. I didn't take it off. I liked it. I said this year, we're in a similar situation heading into the summer. You could see something similar like this. And I do believe we will see something similar to this. Am I getting out? No. And the reason is because I'm a long-term investor. Now, again, 8% is short-term. But again, on this screen, I just explained it to you. I explained my portfolio. That's all within the first 17 minutes of this podcast. So this was a master class on me. Not you, on me. But if I can give you any guidance on this, that's a good way to take a look and understand how I do things. So let's talk about some of the catalysts for the summer. Goldman Sachs says there's a wall of money pouring into equity markets. If you want to talk about catalysts, this is the catalyst. This is why, Tom Lee says that SPY will be up at the S&P will be at 5,500 by the end of June. There's a wall of money. Historically, the first 15 days of July were the best 2-week trading period of the year for equities. The rally tends to fade after July 17th. So you want to be prepared for this. The NASDAQ has posted gains in 16 consecutive Julys with an average return of 4.6. We just talked about TQQQ. And that is a strategy that you want to have in your portfolio. You want to make sure you have money. I just sold Amazon the other day. What did I sell? 500 shares of Amazon? It just triggered in the algorithm to buy Amazon. Am I buying Amazon? No. I'm not buying more Amazon. Even though the algorithm says buy Amazon here at 181, I have identified that 188 is a resistance level. Do I care about buying Amazon at 181 to 188? No, because I don't want to hold Amazon short term. I want it to get past this wall of resistance. Once it gets past that wall of resistance, I will buy again. But I want cash on the sideline so that I can take advantage of that July. This is how you plan. This is how you do things. Well, I should say this is how I do things, not you. But take my advice. Now let's talk about GameStop. I think, I was talking to my mom yesterday, and I think GameStop does, and I laid it out in yesterday's newsletter. I think GameStop with the 121 million shares that on June 20th, I believe, go and read yesterday's newsletter. I may have these dates and numbers wrong. But the amount of shares that need to be fulfilled, I think there's a reason that they are trying to push Roaring Kitty off of E-Trade. I think they're trying to disqualify that trade. And I think the reason is they don't have 121 million shares to actually fulfill the order. So if he actually exercises that option, they're stuck between a rock and a hard place. Now, am I buying GME with going full balls deep on this one? No. Am I looking at it? Yes. And how am I doing this? Well, I do like this A+ setup that I have, the 5-minute A+ setup. And I've gone over this before. The entry is the key on this one. Now, the entry in the pre-market got you a nice 3% gain. But we're probably going for another run. You can see pre-market doesn't have a ton of volume. And again, we just went over my screen, so you should be able to read this. The MACD about to cross up. RSI, no man's land at 53. We have confirmation over that 9-day. Interesting as we go into another candle on 5-minute. You're going to see the volume pop, and you're going to see it pop here for the next probably until 10 o'clock or so. That would be my guess. And if we start moving up in this, you can make some money. This is a trade. But in my mind, if you wanted to hold on to this for long term, I may actually do it. Now, I'm not going to do it in a big way. I may do like $1,000. Now, $1,000 is not going to life change my, it's not going to make a difference in my life. $1,000 is, to me, is not going to pay my rent. $1,000 to me is not going to change 5 years from now for me. But if I can make $500 because of a short squeeze, might be an interesting one. The 4-hour got me in at $30.86. We're trading at $31.45. Would have been nice to get in here at $30.86. But, again, the 4-hour algorithm, it's too long of a term for me, so I like doing a little bit shorter. Let's take a look at the 65-minute. And does this one work for me? Again, I'm just going over different time frames for you. Well, the 65-minute, when you back test this 65-minute over the last 8 months on GameStop, you make 247%. That's a good win percentage because you have times where you make 20% like this. You have times where you make 109%. You win 35% of the time. So you have a 350 batting average in baseball in this one. That's not getting you, that's getting you on first base. That's an amazing batting average in the major leagues. Your average win is 8.75%. So your average win is 8.75%. The key of this 65-minute algorithm is that you are, when you lose, you're capped. Your average loss is 1.63%. So as long as you can keep those losses capped, that's the key. Different time frames work for different people, and it will tell you different things about the stock. But I do think GameStop in particular, GameStop exploded into close, up 19% yesterday. The net premium and options activity on unusual whales shows it. Huge buys came in, the most in the last 7 days. This one might be getting ready to explode. And if you want to read about how Roaring Kitty went from 53,000 to 300 million and could one day top 1 billion, and we're not talking about any time like, 10 years from now. This could be very soon that he could have $1 billion if this short squeeze goes up. He could very well have that. If he's not kicked off the platform, again, E-Trade is going to be in a hell of a bind. Citadel will be in a hell of a bind. It's just an interesting play. I'm not suggesting you YOLO this. I'm suggesting maybe it's something you look at. But if you lose sleep at night, and this is always my key, if you lose sleep at night, then do not do this trade because this is not worth it. Nothing is worth losing sleep in the market because, again, The entire market is bottom left to upper right. If your portfolio's going upper left to bottom right, you need something to change because you're not keeping up with the market. Time in the market, we went over. The majority of my stock is buy and hold. So I'm going up. We're in a bull market. Now, which would you rather own? Oh, I have a couple of notes here. XLG. We had a cross up on XLG today, and I had a note in my notes because I gave my dad this one maybe a couple of years ago, and it was right after it might have been January 2023 when I saw something and everybody was talking about how the big cap tech stocks were way down, and I said, Dad, you're close to 80s. Let's look at getting you out of the Qs and maybe into something a little more safe. So let's look at the S&P. Let's look at the top 50 because I don't care about the other 450. I said those other 450 stocks, we can invest in them, small time if we find a company that we like. But the top 50 to me just makes sense because that's what's moving the market. And so we bought into XLG. Now this has been a phenomenal return in a sector. And XLG just got another MACD cross up on my screen. You're seeing the RSI at 70 and you're saying, why should I buy this? Well, we just got a MACD cross up. Is it going to be bullish? In my mind, I think you're a bull market until you can. But XLG for me would be something that I would say you dollar cost average your way in. So you're really looking at entries. Look at this one. Back here on April 24th, in a top 50 set, I mean, this is 50 stocks that you're getting exposure to, and you are up 8% over 43 days. That's a phenomenal performance. And you want to see, if you want to see what XLG consists of, you go over to Seeking Alpha. And this you can do for free, by the way. I don't think Seeking Alpha makes you pay for this stuff. But you can pull up XLG, and then you go to the holdings. And you say, okay, what does XLG hold? Well, it's Microsoft, it's NVIDIA, it's Apple, it's Amazon. It's everything you want in an ETF. Number of holdings, 56. It's got 56 holdings. So this is a fantastic ETF. But remember, it is heavily focused in technology. You do have exposure to Berkshire. You have exposure to Lilly. This is my core portfolio basically put into play. It is a great ETF. And again, I put my dad on this one. Now, another one that went nuts yesterday is Taiwan Semi, TSM. And this was because this is a core portfolio stock. And it's really done well in the 4-hour algorithm. This is 97% up. If you use the algorithm, 27 positions over 24 months. 73% if you just bought and held. I would say it's a buy and hold, but we just got a cross up here at 162. You are trading at 163. Do you want to buy it? Well, I don't think it's crazy to buy. Remember, the biggest, Warren Buffett sold this, by the way, at like 90 because he didn't want the political pressure. So even the greatest investor of all time does sell out of some. And there's a reason. He sold out of it because he didn't want to deal with China potentially moving on China. Or I'm sorry, China moving on Taiwan. So it's moving. All of the AI plays are working. So let's take a look. Which one would you rather own, Apple or NVIDIA? Because NVIDIA just crossed the 3 trillion mark. Now look at Apple. Apple's got a net income, and we've gone over this. Gene Munster believes that Apple will outperform NVIDIA, that NVIDIA has just grown too much. Apple's net income, 100, that's net income. Gross revenue from NVIDIA is 79 billion. Net income for Apple is 100 billion. Again, Apple, for me, much more stable company, will probably not have the pullback that NVIDIA has, much less volatile. And if you look at this, Apple or NVIDIA, this is Gene Munster. He puts out 3 reasons he believes Apple will outperform NVIDIA. 2 days ago, the gap was about 7%. And this afternoon, and he put this out yesterday morning, some perspective, why it's news. The market cap race is relevant for some investors given its momentum gauge. NVIDIA surpassing Apple will be viewed for some as an official change of the guard and underscore the need for Apple to inject AI into their business. What are they doing next week? They're going to inject AI into their business. Both companies will likely be winners. And I agree with this. My view is market cap conversation is completely irrelevant. I completely agree. What matters is these companies will play an increasing role in our lives. Their dominance will likely lead to increased market cap for both companies. Add Microsoft to this. All three of these companies will play a huge role. And number 3, advantage Apple. I believe over the next 12 months, Apple shares will outperform NVIDIA based on a belief that Apple will be successful at leveraging AI to increase demand. My sense is the majority of investors are skeptical that Apple can pull it off. I would completely agree. Completely agree. We can talk about NVIDIA, $3 trillion mark. If you don't have NVIDIA in your portfolio, the stock split is happening next week. So again, I think it was crazy. It's almost a sell the news thing. When the stock split happens, I don't know if the stock's going back to, remember, it's a 10 for 1. So at 1,237 where NVIDIA is trading right now, that's a $123 stock. I don't know if the stock's going back to 70 or if it's going to 200. But both numbers are just as likely to happen. But the valuation that this has had in the run-up is crazy. And it's the 3 trillion mark, there's only 3 of them. There's only 3 of them. There's Apple, Microsoft, and NVIDIA. And we can go over the chart and look at this chart. If you want to know, which one you should have invested in, well, look at this chart. This is a 10-year chart. 10 years, okay? NVIDIA started to break out. Now, this goes back to 2014. I should have been in NVIDIA. This is what's called a millionaire maker. Because, Jim Cramer talked about it last night. Somebody bought 2,000 shares. They're now multi-millionaire. And that's what this stuff can do. But again, this rise is crazy. And one of two things. I even put Tesla in here. Because Tesla over 10 years, you're getting 1,000%. Apple, it's only 861% over 10 years. In my mind, one of two things. Either this shit has to come down or the other ones have to come up. I mean, again, NVIDIA is not overvalued, but it has run too far too fast. Do you want to buy in now? If you don't buy in now, you're likely just, we might be going to 1,500, which would be 150 on the stock. And again, that's a huge, huge upside. If you want to go over here to Seeking Alpha, again, a lot of this is on Seeking Alpha. The Wall Street has it as a strong buy. Their price target is 3% down from here, but they're going to continue to raise their price target. Look at how they've raised their price target. If you don't think they're going to raise their price target just to keep up with the stock, and that's going to be a boom for the stock, you're crazy. But again, I say it, after that split, there is a likelihood that it could pull back to $70. Do you want to get in on this one? Just expect a crazy ride. One of the reasons you can expect a crazy ride is because now antitrust suits are coming in. And this is not a political thing. Again, this is not a political thing. The U.S. administration that we currently have does not like big tech. You saw this with Amazon. You see it with Apple. It's now after NVIDIA. It's now after Microsoft. That's not a political thing. What this does is distract from companies. You saw it in Microsoft stock over 10 years. I held Microsoft stock. It wasn't good for Microsoft stock. But again, you want these stocks in your portfolio. They will typically outbeat the indexes. Now let's talk about solar, because solar has been First Solar has been on an absolute tear. We're going to pull up FSLR, and over the month, I think it's up 40%. In the month of May, we can go and look at it on Seeking Alpha, because Seeking Alpha does have a great tool to look at. But look at First Solar, and we talked about this, that 231, if we go to the weekly, that 231 was resistance. That was resistance. It broke through there in 1 week. That is a 40% candle the week of May 20th. And we continue to move up towards that. We continue to move up. The RSI, completely crazy. And this is why looking at different time frames help. Because if you looked at the 4 hour and you just saw this kind of stuff, you'd say, you know what? We're trading sideways. This might catapult into another one. Look at the Bollinger Band cinching up. This could go for another run. But then you take a look at the weekly, and you say, we're at all-time highs. We're at all-time highs on this one. Let me just make sure we're at all-time highs. I can pull it back to see. I believe we're at all-time highs. I mean, this thing hasn't exactly gone, parabolic before. But you can see that pullback and then that immediate pump up. But with China shutting down the solar panel production, First Solar could get the solar stuff in the U.S. could get a huge bump. It's something you want to keep an eye on. But I would say, be aware that this one just outperforms any algorithm that I could ever do on this. Buying and holding just makes sense on this one when you see those huge bottoms. But China shutting down is huge for China stocks. Now, we went over Dollar Tree, and Dollar Tree kind of lost some stuff yesterday. But what I wanted to do is show you something. This is an interesting one. Because over the max, this goes all the way back to 1994 again. 1994, you can see, this is Dollar Tree versus Costco versus Walmart versus Target. Now, Costco has been the clear winner, and it's been recent. This one has taken off. Costco, that's that blue line that's just taking off. Dollar Tree, on the other hand, has had some weakness. It's pulling back. But the slow and steady winners, in my mind, have been Walmart and Target. Those are the slow and steady winners. They're not experiencing huge growth. But again, I own Walmart and I own Target. I own Costco, but that's just recently. Dollar Tree, I don't own. I didn't want Dollar Tree. And the reason is I do think that you're pulling back and you're seeing a weaker consumer. So I thought this chart was interesting. I put it out there. You can do what you want. Super Micro. Here's an analysis of Super Micro. Likely dead in the water at best. This talks about how they're facing margin pressures. Now, Supermicro, I do have positions in this. This is part of the short term because it's under a year. This is and I do have a very large position in Supermicro. It grew from a small position to a very large position. It is still not 10% of my portfolio. It is a good amount. It is not 10% of my portfolio. A stock like this, I would not let get to that size. This has been a huge, huge winner. Just over 2 years, buying and holding made you 1,317%. This article goes into why it might be. If you own DELL, if you own SMCI, I would take a look at this article. It will be in the newsletter. I will include the link in the newsletter. But SMCI, it's an interesting one. The chart doesn't have you in. The algorithm doesn't have you in. It probably will today, depending on where the stock goes. Do you want to buy it? I own this one at 1,000. I also own this at 200. I own it across the board. I have dollar cost averaged this one. I have some lots that are losses, some that are winners. Most of my winners are in my brokerage platform, and that has tax issues. So I want the tax event to happen where it's a long term. That we go back to it, and it's an overall just thought process that you should have in your head. And when you buy a stock, you should have all of this in your head. Yes, I've lived from this one going all the way from $11.38 down to $800. Yes, I have lived through that. I have no problem with it. I own it significantly lower. It's just that. Now let's talk about LULU, because LULU announced earnings yesterday. It's called a God candle. And that is a 15-minute chart. It had the God candle. They blew away earnings. Just delivered a crazy good quarter. Well, I shouldn't say good quarter. It's above the street view. It is still, in my mind, not a buy. And when we talk about LULU, you can talk about trying to time the bottom. LULU is up 3% now. This was up as much as 15% in pre-market. It's now 942. Okay, so this candle is the current candle. You currently have a minus 5% on this candle. Do you want to buy this one? I'd wait 3 days. 3 days for this to settle down. The news was very good, but they still have systemic problems with competition, with their value, and there are issues. So I would wait for this one. Now, earnings today, we can talk about it. DocuSign. Well, I'll wait for DocuSign on this one, but let's go into some education stuff. Now here, this is a great video. How I turned six. This is a small account. So many of you may not have, millions of dollars in the bank like I do. Many of you may have just $1,000. This is Ross Cameron from Warrior Trading. Now he's putting out a ton of videos. Do not follow him and think that you can do this on day one. It is not something that will take 8 hours of actually learning. This is years of learning how to do this. But Ross guides you through trading a small account. He has done this a number of times where he takes $1,000 and goes to $16,000, $20,000, $30,000. Understand there are tax implications, and he goes over that in his channel, in his news. I do not think you should buy his course. I think his course is too expensive. I think he teaches you everything that you need to know in the free videos and his live chat stuff. I think everything he teaches you is absolutely gold, and he's very, very good and very generous about what he teaches for free. Now, people who want to day trade, he's a momentum trader. He doesn't care that GameStop has no forward path to actual growth. He doesn't care. He's going to buy the stock and trade it on the chart. We went over my chart here on for his trading, and he goes over it. I posted this video in the newsletter a couple of days ago, but he goes over how he's mainly an investor, not a trader. He trades a very small amount. It seems like a large amount because he makes millions of dollars on trading, but his overall portfolio is buy and hold. So he's using 4-hour, weekly, monthly charts to look at his long-term portfolio. But for his trading, he's using 1-minute charts. That's the difference in time frame. So you have to understand the difference in time frame. 1-minute chart is going to move a lot faster. It could show you a 10% pullback. But if for some reason that 1-minute chart 10% pullback, and then you see during the day it comes back, well, the daily chart ain't going to show you that 10% because the daily chart is going to show you a candle, but it could be going up, and you could see a positive, it might be a 10% pullback during the day. Time frame matters, and Ross teaches you a bunch of this. But the key point in this 48-minute video is how he trades small accounts, and that's an important one. The other important one that I thought he posted is this one. He went to ChatGPT and said, hey, give me a trading strategy. 35% in 2 days. He traded $1,000. He went to ChatGPT. Now, what you can do, here's what you can do. You can take his system, and you can take what he got out of ChatGPT, and you can put it into Trendspider and create a strategy and trade that. That's the success of what Trendspider does. You can backtest it. Again, he says he turned 35% in 2 days. Well, you can backtest it against 4 years. Does the strategy work? Does it hold up to big downturns and upturns? You can take that and backtest it. So I put this in so that you can see it. Now let's talk about the social request. Dex, thank you for all your podcasts. Appreciate the support. Are you still in DocuSign? If so, will you be holding through earnings? Now we'll talk about DocuSign because I knew that somebody asked about it. So here's my my position in DocuSign is extremely small. Remember, 90% of my portfolio is over 1 year. My position in DocuSign is less than probably $2,000. It might be $1,000. I bought it 65. I bought it the high. I have simply forgotten that I had this position. And I only remember when earnings comes up or somebody asks me about it, but I haven't done a full cleanup of my losses. I probably will do that over the next month. Am I holding through earnings? Yes. Am I expecting big earnings? No. This is a software name. DocuSign is a software name. So that's the problem with software is it just hasn't been very good of late. So take a look at it. I don't know that I necessarily like it. I've identified this as a trading range. It's kind of stayed in that trading range. DocuSign, it's going to report earnings. I don't know what it's going to do. I don't have a super kind of, faith in this one, but it does have this nice look. Hasn't gotten you in yet. Probably will get you in right before earnings. So let's talk about Boeing. Dex, maybe the same Dex as Spotify. Boeing looking like it's a buy. I've been eyeing this one for a while, but it seems like Boeing is starting to trend upwards. I know the company has seen a lot of issues. Is there a time to bottom? Boeing's in the core portfolio. They just had a launch of their the rocket after huge amounts of delays. You're seeing the algorithm here. I mean, the algorithm works. The algorithm makes you 85% in this name versus buying and holding makes you 36%. It has seen some upside. I've identified this 176. If you want to time the bottom, try and time the bottom, but I've identified that 176 all the way to 200. If you want to trade this one, I think we get back to 200. I think you probably get back to this 220. I'm holding a very small position in Boeing. I just don't have faith in the management. I've been contemplating pulling it out of the core portfolio and replacing it with DELL. And the reason I'm contemplating doing that is because Boeing's management, we did this with Target. Target, we pulled out of the core portfolio when it wasn't their earnings, it wasn't their inventory. I would have gladly stayed in and said, hey, Target still deserves to be in the core portfolio. But it was the management's response to things, the management's guidance, the management stuff. It's the same thing with Boeing. I mean, the new CEO is out. The new CEO that they just put in a couple of years ago, he's out. The new lady, I think it's a lady, is coming in at the end of the year, and we'll see what happens. Do I have super hope of Boeing? No. If you want to see about Boeing, go and watch John Oliver's thing about how when McKesson or somebody else took over Boeing, I forget, McKinley, somebody took over Boeing. And they injected, in this great company about engineering prowess and how it was fantastic, and how this new company came in and put in, stop controls and said, this costs and blah, blah, blah. It's just bad. So I'm not 100% sure. There are people who get on a Boeing plane, find out it's a Boeing plane, and then get off. That's how bad this company is. There are whistleblowers who said, I would never fly on a Boeing plane. So do I have a complete confidence in this one? No, but in my mind, it's still a great American company. Their revenues are still very good. They're still delivering planes. They're still going to do things the way that Boeing does. It's just too big of a company to actually say, hey, we're on our way down. Noel Jams, can you please do an analysis of EVA stock? It's the largest wood pellet manufacturer in the world and has a 322% dividend. Noel, if you have a 322% dividend, there is no way you can sustain that business. You are paying out more than the actual stock price in dividend. There's no way. So here, upper left to bottom right. This means this tells me stay the hell away from it. Stay the hell away from it. Look at it in EVA. So in Finviz, if they have a 322% dividend, it is not a forward dividend. It is a trailing dividend, and that means that the dividend has been huge, and they've just diluted the company to they've robbed Peter to pay Paul. That's what it is, and they're trying to get you in. This is a trade. It is not something that you invest in. Target price is $4, but look at this. This goes all the way back to August 2022, March 2020. This means nothing. Insiders, nothing. Options exercise, at zero. They're giving away the stock. EVA, they're giving away the stock. It makes no sense. I don't know where you saw the 322% dividend. We can check here on Seeking Alpha. They're warning you too. They're warning you. No, it's going to zero. This is 100% going to zero. Let's see the dividend here. Boom, boom, boom. It doesn't pay a dividend. So EVA doesn't pay a dividend. So I don't know where you're seeing that it pays a dividend. But no, stay away from it. Don't even try it. It's 60 cents. It's going to zero. TSAC. I listen to you every day at work. I'm fairly new and looking for some insight. What are your thoughts on EVgo stock? Seems like it's had a rough past, but looking like a potential turnaround. You can't time the market. So don't think you are going to time the market and say, oh my God, this is the bottom of this stock. This is an absolute trade. I'm an EV owner. I don't think that this stock makes sense from a fundamental standpoint. We can go over it. But EVgo, the algorithm makes you 1.9%. That says, why would I want to trade 30 times over 24 months for a 1.9% gain? Well, let's take a look at the weekly chart, because buying and holding over 2 years loses you 77%. EVgo, upper left, bottom right. There is no reason for you to get into this stock. None. None. We go over here to Seeking Alpha and we go to EVgo and we look at the fundamentals of this. Strong sell in the quant. There is nothing good that looks about this. Nothing. The valuation isn't bad, but they're not making money. They're not making money. The growth, see? I mean, they're growing at 164% year over year revenue. That's a huge one, but they're not making money. They are not making money. Profitability, absolute F. Absolute F. They are not making money. The revisions, 3 up, 3 down, 3 up, 3 down, 6 down for the revenue. And it makes no sense. If you want to trade this one, trade it on a tight time frame. I would just not invest in this one. It may look like a turnaround. As an EV owner, I don't even know but what EVgo does. I think it's charging stuff. It makes no sense. Just buy Tesla. If you want to buy, here's the thing. If you want to buy an EV stock, Tesla is the only one that makes sense. And I would still say that's a gamble. But Tesla is the only one that makes sense in the EV world. Rivian, which has been, hyped up there, which Amazon, invested in. The valuation doesn't justify losing $130,000 on every truck they sell for $70,000. It doesn't make sense. You can trade this one, and I do think at some point in time, this one returns to be a $30 stock. Do you want to put your money into it? I don't know. I mean, again, that 846 on the 4-hour timeline, the 4-hour algorithm, over 2 years, it loses you 34%. But if you just bought and held, you lost 60%. If you're looking at trading this one, I wouldn't have bought here at 846. Where would I buy? I would have bought here at 976. And 976 had confirmation. You lost your confirmation. So understand, if you're going to trade EV stocks or anything like that, you have to make sure that you know what you're doing with charts, because they are going to move. They're not based on fundamentals. Once you get to a fundamental platform like Tesla does, where they are actually making money, then you can move to owning that stock. Trebs from Spotify, new to your podcast and really enjoying it so far. What are your thoughts on DraftKings or government regulations are concerned? Absolutely. But you can see when government regulations started to come into this, we saw the downturn. You see a gap. And this is why I have gaps on my screen. DraftKings, I own this one. I think I own it at like 24, 25. I've just forgotten about having this position. So I do own it. I think this one, this dollar amount still is a buy. If you get under 30 on this stock, you buy it. When it gets over 30, you can sell it whenever you want. I just haven't sold it. Should I have sold it up here when it got to 49 and almost hit 50? Absolutely. But when we look at a weekly stock, again, this isn't upper left to bottom right. This is a turnaround. And you're seeing the 200-day right there on a weekly is providing you support at 33. If you get under $30, I think you can buy this one solidly. But again, from a 4-hour, what you want to take a look at, Trebs, when there are these things, and this is why Trendspider Gap Snake is so helpful, because the gaps typically do get filled on good stocks. And DraftKings, it's a good stock. It's not horrible like EVgo. Now, is this one that I'm going to make 60% of my portfolio? No. I'm not throwing all of my 43% of my portfolio like Apple is. I'm not throwing that into DraftKings. No way. But it's a good stock. It's valuation D+. They will turn a profit very soon. And that's where it's, looking at this trailing 12 months, they haven't turned a profit. But when they do, this stock will pop. And that's why the stock has been in an upward trend. The profitability is a D-. Again, their sector median is 36%. When you look at it and you look in Seeking Alpha, it's ranked number 4. Win is number 1. Rush Street Interactive is number 1. Win is number 3. MGM, Carl Icahn just took a position in Caesars, and that one popped about 10%. This one, I think you're seeing lower left to upper right for over 1 year. You're up 44%. Year to date, this one is up 4%. Nothing like spectacular, but your 52-week range, you're right in the middle. And so when you want to take a look at these stocks, you look at these. Now, this guy on May 28th, the valuation doesn't make sense to start a position. I would argue it probably does make sense, but I would trade it on this algorithm. And the algorithm, by the way, makes you 151% over 2 years, 24 months, 26 positions. Your average win, 19.3%. That's what the algorithm loves, is volatility. This is a highly volatile stock. Now, your MACD, super low down here. That it just got taken out. It's too low. Buyers will start to show up. Look at the RSI way down here. So you want to take a look at both the fundamentals and the technicals of these, because you can trade these to make money. It doesn't need to be, $1,000 each trade. If you're trading $1,000, the most I would say you target is $100 on some type of trade, a 10% move. That would be a great thing. Again, if you're trading GME, you can turn $1,000 into $4,000, but you could also, turn $1,000 into $50 very quickly. So the volatility up and down, it matters. Now let's talk about scans. If you're looking at scans, what I do every day is I scan all of my watch lists that I provide you in Trendspider. I scan every watch list that I have. I also scan the Dow, I scan the NASDAQ 100, and I scan the S&P 100. Now 500, I'm a big cap investor. So the capital markets are large cap, medium cap, and small cap. I don't care about small cap. I don't care about medium cap. I want the big cap. Now, SMCI, you can talk about it. It was small cap, turned into medium cap. It is now part of the S&P 500, but it is not part of the S&P 100. But here, what you do in order to see the scans are down here at the bottom. What are these? Oh, hold on one second. Hey! What are these scans? These are stocks that show bullish tendencies in the 4-hour algorithm. If you want to scan them, you can scan them yourself. If you get Trendspider, we can go over here. We can go to UNH. Okay, that was the top one of yesterday. If you go to UNH and you scan and you look at it, well, it shows an entry in the algorithm. Shows you at 508. You're at 503 right now. Do you want to buy it? 508 was a little bit tough. I say on this one, 450 is your support level. Buy it under 500. You can sell it over 500. So would I buy at that 508? No. I would only buy at that 508 when we start to make a move higher than 550, because 550 has been the top that it's gone to. So you need to take a look at these things. And when let's go down here. Let's see which one randomly. Monster Beverage, MNST. This is one where they're trying to buy back the stock from shareholders. They're making an offer. So this one, buy in here at 51.72. We have confirmation. You should have bought here at 51.72 once you get confirmation in the afternoon. Well, that candle, you're at 53 right now. Not bad, but the RSI quickly moving up. MACD hasn't moved over the oscillator. So if you're trading these, you have to take a look. But that's how you use this newsletter that is free. And you go down to the bottom. So today, what do we have? We have enormous list. Way too much to go over. Way too much to go over. All of the ARCs, ARC F, ARC W, ARC K, ARC G, they're all in there. Intel is in there. You want one that's beaten down that I already own at like 40. INTC. This one, has it hit a bottom? I don't know. We're trading sideways. Algorithm gets you in at $30.64. Algorithm loses you 14% over 2 years. Oh, God, that's horrible. Well, you lose 30% if you bought and held. 30 positions. Your average win, 8%. I would argue that this isn't one that you want to take the chance on. Why? 200 days moving down. 50-day moving down still. You want to wait until you're in an upward trajectory. Look, back here, the 200-day moving positive, 50-day moving positive. You have short-term confirmation right here when it says to buy in at 35.57. That's a nice 20% move. And you may say, well, why didn't the algorithm get you out here at 45? Why did it get you out here at 42? Well, you don't want to be in that top and bottom. There is no algorithm that's going to time this market at the top and bottom. You want to be in the middle. You want to play in that middle ground. So yes, the algorithm works. How do you get the algorithm? Again, you go over to the link tree, linktr.ee, and you click on Trendspider. They are giving you 6 months for free, $48 a month. And you get my 4-hour algorithm, you get the 65-minute algorithm, you get the 5-minute algorithm. Everything that you need, all the watch lists that I use, everything that I use here to manage my portfolio, to trade stocks, everything you see. If this seems like a lot of money to you, then you're not trading with a large enough portfolio. And that's not a knock on you. I, at one time, wasn't trading with a large enough portfolio. So what can you do? You get software. Webull has fantastic desktop software. Sign up for Webull. Right here, the fourth link, join Webull, right there. And it is a great software for your computer. Again, I'm a boomer, and I don't suggest you trade stocks on your phone. I cannot see stock charts on my phone. This is the best mobile app for a 1-minute chart. And I love trading in the Webull on a 1-minute chart and gambling. I don't do it often, but I do it. I wait for confirmation, I find confirmation, and then I'll trade it on a 1-minute chart. But they make it super, super simple to buy and sell on that phone. So Webull has the best desktop software for free that I like, but they also have the best mobile app. Now let's talk about it. Say you don't want, charts, you just want fundamentals. Well, that second link, Seeking Alpha, 20% off your membership. You get access to the quant. The quant destroys buy and hold. So if you want to find a new stock, you go over here to Seeking Alpha. Say you say DraftKings, great stock. I want to find something else. Well, the quant says Rush Street is better. It says AGS is better. It says Win is better. And you go and look at the stocks. And so you can investigate these stocks. Flutter Entertainment, they just had an upgrade. Well, the quant says it's a hold. Reason? Valuation, profitability. Nobody's really covering it. Wall Street says it's a buy. Well, there's 11 analysts that cover it in the last 90 days. We can look, 28% upside on that one. Now, they just started covering this one, Flutter. They just started covering it. So you don't know how historically it goes to that price point. So if you want to do your own research like that, then the second link right here, Seeking Alpha Premium, 20% off. You get a free 7-day trial. That's great. I mean, that's only $189. Now, say you don't even want to do that. You just want somebody spoon feeding you stocks. Well, I would argue that you better have somebody back test that strategy of spoon feeding you stocks. Seeking Alpha has an offer for what they call Alpha Picks. I save you $50 off of that. This is a back tested strategy. They made 122% with their Alpha Picks versus the S&P during the same time period made 35%. These are 2 stocks per month. So it's on the 1st and the 15th. They alert you when to sell. The stocks cover multiple sectors. It's not based, my little thing of 90% technology or 70% technology. They're not in just one. They're across the board. So they're not doing just big cap. They're doing small cap too. You get access to all of these on day one. And what you get it over here in Alpha Picks. And you get all of this analysis. All of this analysis you get. And how, say you want to do it. Well, what I did, I went into this and I went to, there's a couple of strategies that they say. The first is you can buy at least 5 strong picks. And I did that. 2 weeks ago, I did that. I just bought 5 strong picks. Buy the entire portfolio using the portfolio tab. Use the Alpha Picks as just an idea generation. So it's not just for those people who want it just because they want to be spoon-fed. It's for anybody that wants to do a little research too, because they give... I'm telling you, Bluebird, which is a school bus company, that was one that they suggested, has taken off since they suggested. It's been good. But again, I save you $50 on that. So if you have any questions, feel free to reach out. Everything is on the link tree. You can see everything up here. If you feel like, hey, I've given you great stuff, you can even just tip me. And I say gift because, again, it's a gift. But you can say Cash App, PayPal, Venmo. It's all here on the link tree. Say you aren't happy with your current provider at home. I have AT&T gig service. I think I pay like $59 a month. I got a great deal and I get HBO Max. I got a great deal, but this link saves you $75. Say you're unhappy with your mobile service. I have a mobile service, Visible. Save you $20. Again, the link tree is there to save you money. It is there to basically provide you the tools and everything that I use personally, and it's how you support the channel. So feel free to hit me up on any platform. I will talk to you guys tomorrow. It's Friday. this was a good overview of everything. So maybe tomorrow we'll just kind of go over some stuff. Okay, take care, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.